Hello, and thanks for joining us today. I'm super excited you could be here. Today, we're talking about some really cool topics that I think can help you expand out or maybe even get into a whole different type of business altogether. Because we're going to be diving into mastering business ownership. We're going to be talking about expert strategies for success in franchising if you're interested in potentially getting into a franchise and beyond. And beyond, I mean things like SBA loans, because we've got like a foremost expert on both of those topics with us today. So, Paul Eckstein is a franchise and SBA loan expert, business ownership coach, and an investor as well. He's got 26 years of experience in lending, franchising, and acquiring businesses. Beau is a trusted authority in business ownership. He's helped thousands of different entrepreneurs secure funding, navigate SBA loans, and find the right franchise or business to own. Now, through his extensive network and expertise, Beau actually guides through the financing process and connects them with the best opportunities. He's also the host of the Investor Financing Podcast, where he's created content that has generated millions in funded deals, helping entrepreneurs transition from employees to successful business owners. Now, he advocates for leveraging virtual assistants and AI to streamline operations and increase profitability, empowering businesses to scale efficiently. And now, in addition to being a licensed California real estate broker, Beau also offers actionable insights through his platform, businessownershipcoach.com. That's businessownershipcoach.com, where he helps individuals explore franchising or elevate their existing business ventures. Now, Beau's passion lies in helping people break free from the corporate grind, build wealth, and create lasting legacies. Beau, what's up, man? Thanks for coming
Uh,
on with us today.
Thank you. I'm excited to be here. I've been following you for years, and you're always. I remember years and years ago watching a lot of your content, and like I always said, this guy, you're not only are an expert in the business funding space, but your marketing strategies are top notch. So, hats off to you. So I've been following you for a while.
I appreciate that, man. That means a lot. I sometimes I forget how long I've been doing this, and then I have the young bucks all come on here onto the show, and it's like, wow, it's pretty cool to see like a lot of these 20-year-olds, running into the scene and the cool things they're doing. And it's also really cool. I'm sure you'd agree. I don't know how long you've been doing this yourself, but just to see the AI and the revolution of technology that we've seen over the last decades, it's really cool, and its ability to help business owners get money.
Oh yeah, I mean, if you're not using AI, you're gonna be replaced, right? Because there's a lot of people that AI can 10x, 100x your production, and I use it every single day. And it's amazing to me that people haven't even played around with ChatGPT yet. It's like once you understand the power of what is capable, I have some of the franchises I work with. They use AI callers, and they're doing outbound and booking appointments, and then like I mean, it's sales agents and appointment setters. It's like it's really crazy times right now. So like my suggestion for everybody is just learn a little bit. Go onto YouTube University, play around on ChatGPT, get familiar with it because it's a really a game changer. I'm not a very good writer, but with AI, I can get my thoughts out and get articles done in seconds rather than hours.
Yeah, agreed. I just had an AI expert I just interviewed for the show, and it's astonishing on where we are and where we're going with AI as well. Now, you're big in franchising. So, what was originally piqued your interest in franchising?
So I started at 20, I'm 47 now, so 27 years ago already. Started as a residential mortgage broker. I actually started as a telemarketer. I had met a guy at a gym and he was a loan officer. He said, "Oh, you should come in and you can get licensed, but you could start as a telemarketer." So I was crushing it as a telemarketer back in the day. I quickly got my license and started originating residential loans. That was in the San Francisco Bay Area. Then I got the bright idea to move with a partner, move to Lake Tahoe on the Nevada side because it's a brick and mortar state to get licensed there. So we opened a residential mortgage company in 2005, and then everybody knows what happened in 2007, 8, and 9. At that time, I was in my 20s, owned a bunch of real estate, and got completely wiped out. Ended up moving back to the Bay Area at that time, and I'm like, look, I don't have a college degree. The only thing I've ever known is real estate and lending. So I got into doing hard money lending, and this was before all the national fix and flip and DSCR lenders were there. And I worked for some funds in the San Francisco Bay Area, and I started originating uh, fix and flip loans and construction loans for investors. And then, of course, that industry got blown up and institutional money came in. But that really cut my teeth. From there, I was like, hey, I'm lending money to these house flippers. I can do this. Did some house flipping. And then I didn't love house flipping, but back then you could just cherry pick deals off the MLS and crush it. So made some decent money, rebuilt my credit, And then I started running real estate investor meetups, built a huge network of people, put on a lot of events in the real estate space. And then it was kind of like a dime a dozen business at some point. So I'm like, I'm kind of bored of originating fix and flip loans. And so I got into commercial lending. And through that, I discovered SBA lending, where I was like, it's an interesting industry because it's not one size fits all. There's lots of banks, lots of credit unions, lots of non-bank SBA lenders. Learned that industry, and through that industry, people would come to me and say, "Hey, can you fund this this pretzel franchise?" And I'd always say, "Well, why this franchise?" "Oh, we just like the pretzels," and they never really had a good answer why they were investing, other than it was usually like some kind of quick serve restaurant or so. Then I somehow discovered that there was actually franchise brokers and consultants. So I actually joined a association and got trained and spent years learning the industry. And actually knowing what I know now, I would have loved to have started in this business because it's so dynamic. So with my background in lending and finance and franchising, I'm a deadly weapon now. And then I set out on a mission. It first started with 10,000 people. Like I finally got clear after many years of business. And I said, look, I've never really had a mission. I just like to help people. So I got crystal clear on a mission. And I said, I want to help 10,000 aspiring entrepreneurs become successful business owners over the next 10 years. And then I scratched that out about like 3 months ago. I go, 10,000 is really not that many because I'm not saying I'll directly help them, but through my podcast and guesting on podcasts like this, I can help well over 10,000. So I scratched it out and made 100,000. And then I'm like, you know what? That's actually thinking too small. And I set the target to touch 1 million people in the next 10 years because everybody should own a small business. I believe everybody should own a small business. I actually have a book that's in pre-sale right now that's about why everybody should own a business and how to transition from corporate to owning your business. And I call it the triangle method. It's tax strategy, operating business, and real estate, right? Like at first I was buying these rental properties in the Midwest because I thought I was going to get all this cash flow. Do you get cash flow? Maybe a little bit, but the time you do the CapEx and the repairs, you're not really cash flowing. It's more of a long-term play. Sold all those properties because I was like that. It's really a myth that you're going to get cash flow on long-term rentals, especially if they're cheap housing stock. And so that's when the focus really went into like, if you really want to create cash flow, you gotta own an operating business. And that's like the love of what I have right now. And with SBA financing, it's the most aggressive financing out there if you can qualify. So I think knowing that and pairing that with franchising is like a perfect complement to really get out there and help people. And my book it's called Paycheck to Freedom, and I actually wrote it with a pretty famous CPA. His name is Tom Wheelwright. So he's a rich dad advisor, and he's written a lot of books. So that was pretty exciting for a first book to have a co-author with somebody who's sold hundreds of thousands of copies of books already. So excited for that to roll out at the end of March. And then I do a lot of virtual events and summits. I have one flagship summit that I call Business Ownership Summit. We do it quarterly online, and that we just do deep dives on learning different franchise business models, interviewing people that own businesses, bringing on CPAs to talk about tax strategy and all that good stuff. So that's kind of the background of how it all happened. And I learn every day. I'm always learning, and I always listening to other people's podcasts. And there's a ways every day I'm on a phone call or a Zoom meeting with somebody. Like yesterday, for example, this stuck out with me. I don't do a lot of like MCA or any revenue based financing right now, but like the guy was a chiropractor. And he's like, we started talking. He's like, I heard you on a podcast and I want to do something. He's kind of stuck actually. His business is doing fairly well, but he racked up some credit card debt. And I'm like, really, what you need to do is do a revenue-based loan because his scores went down to 618. A lot of people don't understand. And you were always an advocate years and years ago, right? Like, guys, you got to keep your personal credit pristine because even though they don't understand the basic strategies of credit and what credit can do to you. And so like, I gave him like in like 10 minutes, I gave him a whole new plan because he was kind of stuck and he's an older guy and he's like, yeah, my business is doing fairly well, but I racked up, X amount of dollars in credit card debt and can't pay it down. So I said, look, the high level, you can do some sort of revenue-based loan or financing with your deposits from your chiropractic business. Take that, pay off your personal, you're not supposed to, but pay off the personal credit card debt. Now your 618 credit score goes to 740 where you need to be, right? Then I told him about why you want to build business credit. Because when I go into a bank now, they're going to, granted they pull my credit, but I'm pristine on that side. And so then I gave him a whole plan. Then we're going to do SBA working capital loan, maybe potentially. And then where he's going to open a franchise that aligns with his chiropractic business. So we're going to do like a health and wellness alongside and buy a building using SBA financing. So I gave this guy a blueprint, but there's a lot of people out there that are stuck. And that's what I think we do well.
Yeah, and I love that. I love the history, kind of where you come from and what got you interested in where you are. So, buy, build, franchise. I oftentimes hear buy or build. Franchising doesn't make the list in a lot of cases, and I don't know why. So, when do you think it's the right time for somebody to consider buying a franchise?
So, I mean, a franchise is really you're buying into a system and a marketing strategy it's a business in a box. I hate to say that, but it's true. Like, there's well over 3,000 franchises, and most of the franchises we put our candidates into are non-brick and mortar. They're usually in the home service, recession resilient businesses. Just to give you an example, I had a gentleman come to me and he's like, "Look, he does gutter sales, for new gutters, and he did fairly well. He made about 100 grand a year, but he's like, look, I'm not building anything. I'm like, at the time he paid taxes, he really wanted to own a painting company. So we found him a painting franchise startup, built in the franchise fee, working capital, all that good stuff. And the nice thing is when you have small ticket franchises, meaning the total project costs are under 150 grand, there's banks out there that will fund 90% even on a startup. So they're basing it on projections, as long as it's an approved franchise. For this guy got into business with 12 grand out of pocket, essentially. So we can help everybody. And that's the beauty of it. And then, going along with what you do, I think there's such a need to educate business owners on entity setup, on building credit lines, on like how to really leverage, because most of us don't have several hundred thousand sitting around in a bank. We need to like leverage into financial freedom. And I think if you do it in the correct way, you'll win versus you do it in the bad way. So I see so many people. I get this call when I get to the part, how's your personal credit? Well, it was good, but I started charging up a lot of credit card debt and I'm like, is that personal credit? Yeah. Okay. Step one, don't do that, because you got to keep your personal credit pristine, And so like, it's so funny that so many people don't even understand the basics of credit, where I think everybody needs that course first so they can leverage into these businesses correctly, because there is good debt and there's bad debt.
So I see a lot of franchises that are out there, and they're pretty expensive to get into. Like I'm not throwing out McDonald's. I know nothing about them, but that being said, I see it where they've got, they're saying you need to be prepared ultimately sometimes for hundreds of thousands or even millions of dollars that you're going to have for build out, for location, for all these other things. So do you think there's a lot of different ways to get these franchises financed where you don't have to come out of pocket with all that money?
Yeah, I mean, SBA financing for one. Generally, most banks are at 80% of total startup costs, including working capital. They'll fund 80% of total project costs. For small ticket franchises, we have one or two banks that are specialized on loans up amounts up to 150, and they'll do 90%. They're the easiest bank to work with too. So, uh, um, generally, what we do is we give people a business assessment. It's kind of like it's kind of like a disc profile on steroids with different facets. That helps us actually scientifically match what business models might be a good fit. Then we meet like we're meeting right now over Zoom, and I do a lot of intake, asking questions, getting to know them better. From there, I kind of create a thesis of what business models might be good. Then I do territory checks if it's available in their market. I come back to them and show them 7 or 10 different business models. I want them to look at 2 or 3 and deep dive and learn about those 2 or 3. It's kind of our general process, and then there's multiple steps to learn the business, to call other franchise owners. We're essentially like a really qualified buyer's agent in real estate. That's kind of what we do, and we don't actually charge them a fee. We get paid from the franchisor, a referral fee.
So when you do that, and you're helping somebody set up a franchise initially, do you deal with people coming to you and just say, "I want to launch a franchise," or are people coming to you and saying, "I want to launch a franchise in this industry"? Or are they very specific? There are people coming to you and saying, "I need help financing, and I want to buy like Jimmy John's franchise," and they know exactly what they want to buy, or is it just like some of all of them?
It's everything. So I talk a lot about SBA financing, or I have CPAs that refer me deals like, hey, this guy's buying is in talks to try to buy, XYZ painting franchise. Total costs are 200 grand. Then I meet with them. I do I have an intake form. Like, okay, yeah, this like because years ago they had the SBA directory, which had approved franchises on. Didn't mean they're approved, meaning they're good franchise. Means there was approved SBA on an SBA list. So banks used to say, okay, it's on the approved list, we can do the funding. Now each bank has a little different buy box, as you know. Every lender is completely different. You could take the same deal to five different banks. Four say no, one says yes. And so in the franchise space, there's a handful of big players that are the best at franchise startup financing. So I'll take people that and just help them on the financing side, or I help people find and fund their business. Depends on where they come. So like really, I call myself a business ownership coach, which is like, look, any way you need. I have people coming to me for RV park financing. I have people buying hospitalities that are Airbnb operators, people doing franchising. Like I just really want to help people get to where they want to go. And to get where they want to go is owning a business. It's not working for somebody else. Now, there needs to be employees. So, um, I'm not saying like it's just a numbers game, but if you have the desire, I think everybody should own a business. So, like if you're an employee and you're crushing it, maybe we get you into a semi absentee franchise model where it's like a more simple established business to run, but because they're keeping their high tech job making 400 grand a year and they buy some other type of business where they could be semi involved. Some of them need to be owner operator where you're in the business. So when we do all this assessment, that's how we match. And that's like part of the dynamic. It's not like owning a piece of real estate. It's moving parts. As you know, you're a business owner. There's a lot to do. So, but I also help people get into what I call gateway businesses, like vending machines. So we work with a couple, they're not franchises, they're business opportunities, and they sell packages of machines. They actually train you, go to 2 days of training, you get a business coach, and some of these companies actually will place the machines for you. So on something like that, the beauty of that is like if they buy 100 grand of machines, I could finance 90,000 of it with the bank. So like you can get into this business. You spend about 1 hour per week per machine. So there's a business for everybody, and it's just about pairing them with the right business. A lot of people got into short-term rentals, and now they're like, hey, there's too many regulations. They want to start buying inns and boutique motels, all SBA eligible. So there's really SBA. We're blessed as U.S. citizens to have such a cool program because most countries don't have any financing like this. Now, not everybody can qualify because like sometimes they're in a bind and they make good deposits. That's why there's all this alternative financing, which you are the master at, like MCA and revenue-based, asset-based lending, and understanding how all this financing works and then putting it together. Because sometimes you can do an SBA loan and pair it with equipment financing and keep under $500,000. Because if you keep an SBA loan under 500,000, they don't have to look for additional collateral. So there's all these things, the way we work and we put together, they make a lot of sense for people. So what's really exciting though is after you're in business for 2 years, you can get up to 100% financing on an SBA expansion, which is amazing. Or let's just say you own an HVAC company, you've been running it for a few years, you're doing good. The competitor down the street is retiring. You can go buy that business with 100% SBA financing, assuming that everything falls in line. So super aggressive financing out there. It's a 10-year term based on Wall Street Journal Prime plus a margin. If there's real estate involved and real estate's a bigger component of the purchase, you can amortize over 25 years. So you can be creative. And then you can do SBA 504 deals. You can do $20 million deals because it's the first and the second. So lots of ways to do it. And then, if it's in a rural area, for example, let's say you're buying a assisted living facility in a smaller town. If it's under 50,000 population, we use a map. You can actually do USDA BNI financing to up to $25 million. So there's all these amazing programs at our fingertips. Most people don't know about them. There's also state guarantee programs in certain states, which are lookalike SBA programs, which can fit a certain need. So I just try to study and learn. And, I'm always going to conferences and listening to webinars and learning about alternative financing because for me, I just need to figure out solutions for people and like how, is it me referring somebody to somebody or is it, and building relationships with banks. That's what I do. And then on the franchise side, it's understanding what the franchises do and figuring out what franchise model makes best sense for somebody. We also do resales, so franchise resales too, as well. Somebody's retiring, wants to sell their franchise. We have inventory there.
So, Bo, you just mentioned a bunch of off the cuff SBA programs, and a lot of people don't know these. A lot of people are familiar with the 7A loan, where you can get money for working capital. A lot of people are familiar with the 504 loan for fixed assets, such as real estate. So, give me an idea here, because a lot of people don't know that you can use SBA to be able to get a franchise. A lot of people don't know that you can use SBA to acquire a business. A lot of people don't know you can use SBA to start a business. I mean, people are shocked that there's even such a thing as SBA startup loans. So give me an idea. What are the different types of SBA loans that are really out there, the purposes that they really feel like, you can use this to acquire, you can use this to be able to, get working capital. Like, give me a rundown of the SBA programs that most people just are not familiar with.
Okay, so I'll just give you just a case study. Several months ago, a gentleman heard me on a podcast. It was a laundromat podcast, and he said, "Look, I can't find one to buy. I want to start one." And so he had figured out he was leasing a property. He found the spot. He had the equipment invoices and the construction bid. It was $1.2 million total project cost. The guy had no laundromat experience. The guy didn't own any additional real estate. He had about 300,000 liquid. That was about all we had going for us in good credit, and he had a job, outside income that supports outside debts. Good credit. So I went to 3 or 4 banks, got turned down. Hey, it's a risky venture doing a startup laundromat, because the banks pull reports and so forth. But there's always a bank that understands an industry. So on the fourth bank I took it to, sure enough, they approved it. They did 85% of total startup costs. We did whatever that is, 1,022,000 on a construction build out loan where they didn't have any real estate and there was a huge collateral shortfall. So startups are financeable. You got to get a business plan. You got to find the right bank or lender on that. Of course, any owner operated type of real estate, a business with real estate is eligible. So you're a CPA and you've been leasing property for 5 years and you're like, I need to own a building. As long as you occupy 51% of that space, you can get 100% up to 100% financing on the 7A. So we call that a rent replacement deal. You could Now you're capped at 5 million of total aggregate SBA financing. Although we have a new administrator that just got appointed, Kelly Loeffler, I believe is her name. So the $5 million aggregate has been in place since 2010. I believe, and so do other people in the industry, that that's going to move up. And I believe my gut is saying 10, but at least 7.5 million. So there's a lot of business acquisitions, a business acquisition as well, working capital as well, construction deals. So you're building an office building for yourself. They're rolling out a new pilot program for working capital right now. Partial buyouts. You can, like, I've been working for a company. The guy wants to retire. I'm going to buy 81% of the business. He's going to stay on at 19%. I guarantee the loan. He doesn't need to. He gets some of his money. So that you weren't able to do a lot of that years ago, and they constantly update the SOP. So there's like a lot of cool things you could do. Right now, I'm working on a deal that the guy's buying an old RV park, and it's not been operating. It's like pretty much guy forgot about it that owns it and doesn't care. And so the guy that's buying it is going on, and he's going to put 13 tiny homes on it and get rid of the 2 or 3 people that are living on the space right now. And so it's like a $2.4 million deal that's eligible, and we can base it on projections. So you can do projection-based financing. Obviously, if there's real estate involved, more banks want to do real estate. Like some of the banks I work with they only will do SBA with commercial real estate involved. Some of the banks will do airball deals. An airball deal means I'm doing a business acquisition of an e-com business. There's really no collateral. And I might not even have any real estate for them to collateralize. That's okay, as long as you get a bank on board and you're buying a cash flowing business. So basically, I always tell people the same thing. Do you have good credit? Yes. Do you have a decent resume? Yes. Do you have outside income that supports outside debts? Yes. Okay, good. We're there. Is a business in proximity of where you reside right now? Yes, that helps. That's on a, okay. Now we know you're probably going to be good there. Do you have 10% of the total project costs liquid, or can you make that available? Yes. Do you have a little bit of reserves? Yes. Cool. You sound promising. And so, but when you're doing a business acquisition, the real thing is getting the tax returns from the business you're buying. That's how we underwrite off SBA. So right now we need 2021, 22, 23, year-end profit and loss on 24, and a balance sheet. Once I get that, we spread it. And I'm not a numbers person, believe it or not. I hate numbers, but I understand concepts. So we spread the financials, and we're looking for on a business acquisition, you have to have a debt service coverage ratio of 1.15. Basically, that's pretty low. It means the business can support the new debt payment. There's a little bit left over. So obviously that makes sense. They don't want to do a deal where they're not cash flowing. So
Sure.
there's a lot of use cases. Yeah.
So we can use SBA loans for just general working capital for our existing business. We can use it to purchase real estate. We can use it to buy a franchise. We can use it to acquire a new business. We can use it to launch a new business, or we can use it to acquire a business. We can use it to launch a new business. And, depending on risk factors, we can get anywhere between 80, 90% of the financing we need. What about the other 10%? Do we have to have the 10% liquid? Does it have to come from us and our cash? Or, as you know, I deal with a lot of alternative financing options. Can I get it through alternative financing? Can I go in and look to buy a business and get 90% from SBA and then come in and get the other 10% using their account receivables and borrowing against the existing company's account receivables? Just a wild scenario. Like, can is there other ways we can get the 10% down other than our money, or they want us to have the skin in the deal? Meaning, can we use the 10% to be able to get it from somebody else? Or can we use it from our own personal assets? Or can we use it from the assets, for example, of the business we're buying?
Yeah. So you can get extremely creative. So one thing is there's something called seller carry on full standby. So most banks want to see at least 5% equity injection from the buying party. But some banks are as good as little as 2.5% down. So let me give you an example. $1 million acquisition of a business, 900,000 is financed by the bank. 100,000 needs to come in as some sort of equity injection. The seller can actually leave some of their equity. It's called on full standby for up to 7.5%. So now that's 75,000. So you got $900,000 first, seller carries second at 75,000. Now we got to come in with 25 grand, right? To close a $1 million business that's cash flowing and could replace your salary. So that's pretty exciting if you can find the right business and you can, okay, well, what if you're a little bit low liquidity? Now, the deal's got to make sense. Like you got to be able to, even that you can do it doesn't mean a bank's going to do it. But essentially, I'll give you an example of a deal that I'm involved in. Um, the guy came to me. Actually, my wife is the investor in it because I helped arrange the financing. My wife, my wife, a friend referred this other gentleman who's in a mastermind, and he had found a marina with a restaurant with 110 boat slips. And he's like, "Hey, Beau, I found this great business, great returns. At least it looks like that way. The only problem is I just bought a short-term rental. I used all my money." I go, "Okay." He's like, "Can you help me find some investors?" And so the way we structured it is we got 90% financing. It was a $2 million acquisition, 90% financing from the bank. Uh, we had his brother come in with like 30 or 40 grand, and then he needed another 100. So my wife came in with 50, and my other friend came in with 50. So my wife now owns uh, 19%, and my other friend owns 19%, and their brother owns 13%. And then anybody that owns greater than 20% has to be a guarantor. So the main borrower is the guarantor, right? So,
I'm laughing because I love it. Only people that know that go in at 19%. I'm the same way. Like every business I have ownership interest in, it's all at 19%. So I just had to laugh for a second because only we would do that or know that. But anyways, I'm sorry. I didn't mean to interrupt you. It just made me
so
laugh.
no, that's good. So the point is you can bring outside investors. It's better when it should technically it's not supposed to be a loan, but yes, you can get creative, and so you can give ownership under 20% of the business for the down payment, or we call it an equity injection. So on this $1 million example I said previously, you only got to come in with 25,000 because we're getting the seller to carry back 7.5% on standby. It's got to be on standby for at least 2 years, and that rule change. It used to be the life of the loan. Now, the business has the cash flow that you're buying, and sometimes we have to structure the note a little bit differently depending on the cash flow requirements. But you can have like two notes. So sometimes you do a seller standby note, and then you have another note. So there's ways of making the deal work. So that's why when you're doing a business acquisition, the first thing I always say is get the tax returns because everybody tries to send you P&Ls. SBA is very strict. They're going to underwrite on based on the tax returns of the selling business. So we need to get those. Then we come up with a plan. Then you create an LOI. The buyer drafts up an LOI, so they don't get into a business and have to retrade with the seller because the seller's like, hey, you wrote an LOI at 1 million. Now you're telling me you can only do 8. If we get the financials up front, we can write a solid LOI and get you ahead of the game. Now, other creative financing options are we already talked about bringing an investor partner in. You can actually get gifted the equity injection, so it could come from a family member as a gift. A lot of times you could put HELOCs on properties. Maybe you have other businesses where you can do revenue loan, and then that business entity lends to this entity, or that entity becomes a partner in the deal. Um, but potentially you could do some borrow against accounts receivable on the business you're buying, like you're talking about. There's ways of structuring that. That's not my expertise, but I'm sure you guys have seen deals like that. Um, yeah, there's really a lot of ways of doing it, and now there's actually companies that actually will become an equity partner with you. So that's kind of like my progression in the future, is to start a company that does that becomes the equity partner that owns less than the 19% and does it on certain, obviously you have to cherry pick the deals, but I have bankers tell me all day long, hey, we're always running up with like some shortages on financing, right? So like, okay, well, if I can get into some of these businesses and you got to vet out the buyer, because obviously running a business isn't easy. But a while ago, I bought the domain name equityinjection.com, and that's the idea of that business, is to create an investment fund that actually goes out and then has a buy box, credit box, and we would invest strategically on deals, almost like a private equity fund would do. But we could cherry pick. I would personally probably do mostly real estate deals, RV parks, and things like that, because I like the collateral type of it. But you could do it on e-com businesses, anything.
Yeah, yeah, I love it. We just got we've covered so many things, but yet we just scratched the surface on what you could do regarding coaching. We didn't even get a coaching. We could talk about coaching all day long. We didn't get to that. Besides the franchising aspect that you do, and also besides the SBA, where can everybody go that's watching this to be able to learn more about what you do for coaching, to also learn more about the franchising, and to talk to you a little bit more about SBA financing?
Yeah. You could simply go to YouTube and type in Investor Financing Podcast, and you can watch a lot of content. Or you can go to Book with Beau, that's Beau, bookwithbeau.com. Takes you to my calendar. And I meet you for 15 minutes and we talk and see if I can provide value. Although now, uh, because I've become a good marketer, that's getting harder and harder, because it's like, your time becomes more valuable. So, but anyway, I enjoy talking to people, but at some point I'm not going to be able to talk to everybody because like if you tried to do that, Ty, right, you'd go crazy. You'd have 50 calls a day. So I'm trying to like streamline that process eventually, because a lot of people just have general questions. It's like, what do I need to do on a business acquisition? It's like simple. It's like, okay, get the 3 years. Like it's the same thing, conversations. So that's the one thing. Like, it's like, there's a lot of like, I'm going to create some kind of resource for people where it's like, go watch this video, watch these 2 5-minute videos. You know exactly what you need. So then when you call me, you have everything lined up, as opposed to like you call me and you don't know what to ask, right? Like it's pretty simple what we need from you and what we need from the business you're buying. On a franchise, it's pretty simple, credit score and everything. But just go to Book with Beau for right now, and like we'll take care of you. We'll help you how we can, and yeah, that's about it.
I love it. Well, thanks for coming on with us today.
All right, thanks so much.
All right, so listen, make sure you go to bookwithbeau.com while you can. The reality is there's only so long that he could put his information out there and meet with you and give you 15 minutes of his time. But if you go to bookwithbeau.com, and by the way, it's book with Beau, Beau. So when you go to bookwithbeau.com, you're going to be able to find that you can actually choose the type of booking you want. You can either schedule a franchise discovery call or an SBA discovery call, or general meeting, commercial lending discussion. So depending on what you need, bookwithbeau.com will actually get you the type of meeting that you want to get the answers that you want to get. And also make sure that you check out Beau's podcast, the Investor Financing Podcast. I'm going to put a link on the show resources page. Make sure you check it out. The Investor Financing Podcast, a phenomenal podcast. You have to listen in on that because he drops some major bombs, whereas we just scratched the surface here in this episode. And If you want to dive in even deeper, then you can check him out at businessownershipcoach.com. And you can also check it out with beaueckstein.com. And that's Beau and then Eckstein. So make sure you check out those links as well. All of them will be on the show resources page. But most importantly, the one you need to remember is just go to bookwithbeau.com, bookwithbeau, Beau.com, and make sure that you subscribe right now to his podcast. No, seriously, like stop right now. Do it right now. Go to the Investor Financing Podcast and listen in, because you're probably never going to hear from somebody that does as much creative financing with SBA. And this is what we all want. This is where we get the longest terms, the lowest rate. I mean, you're able to get, $500,000 for thousands of dollars a month, versus tens of thousands of dollars you may pay for anything like that on short-term financing. So make sure you check it out with bookwithbeau.com, and make sure you check out his podcast, the Investor Financing Podcast. Thanks for tuning in. Take care. Have a great day.